Rent is one of the biggest financial stressors for most people. It's a massive bill that comes around like clockwork, eating up a huge chunk of your paycheck month after month. No matter how hard you work, it keeps coming, making it feel impossible to get ahead. But what if, instead of scrambling to cover it, you had a reliable stream of income helping you out every single month? This is where monthly dividend stocks come in. One of the best parts of dividend stocks is the pleasure of seeing your payout deposited in your brokerage account without you having to lift a finger. That's a real passive income. And monthly dividend stocks let you experience that joy 12 times a year instead of just the typical 4 times. In this video, we will make $3,000 a month as our goal. This might sound impossible, but with a strategy of $90 a week investment limit, I'm going to show you how to get there. I've picked 6 of the best monthly dividend stocks that will help you reach $3,000 quickly, ranked from number 6 to number 1, which will save you more time. Number 6 on our list is AGNC Investment Corp, trading under the ticker symbol AGNC. This is a real estate investment trust, or REIT, that specializes in residential mortgage-backed securities. In simple terms, AGNC makes money by investing in mortgage loans and then passes those earnings onto investors through monthly dividends. That steady payout makes it a popular pick for those looking for reliable passive income. AGNC is well known for its high dividend yield, and as of February 2025, it stands at an impressive 13.81%. That translates to an annual dividend payout of $1.44 per share. But here's the thing. While the yield is attractive, AGNC's dividend growth rate has been on the decline, showing a negative 6.55% over the last year. That means dividends have been shrinking over time, which is something to keep in mind if you're looking for long-term stability. Now, let's talk about how AGNC fits into our plan of building a $3,000 per month passive income stream. To hit that goal solely with AGNC dividends, you would need around 25,000 shares. Here's the math. $36,000 in annual income divided by $1.44 per share gets you those 25,000 shares. At the current share price of $10.43, that means you'd need about $260,750 invested. But let's be real. Not everyone has that kind of cash sitting around. That's where our $90 a week investment strategy comes in. By consistently investing and reinvesting dividends, you can take advantage of compounding to grow your portfolio over time. In the first year, you'd contribute $4,680, matching your deposits. Fast forward 10 years, and your portfolio would climb to $81,700, generating roughly $939 per year in dividends. Give it 20 years, and you're looking at $313,200, bringing in about $3,100 in dividends every month. Number 5 dividend on the list is the Wisdom Tree U.S. High Dividend Fund, known by its ticker symbol, DHS. This exchange-traded fund, or ETF, focuses on high dividend-yielding companies within the U.S. equity market, offering investors exposure to firms with robust dividend payouts. By investing across a diverse range of industries, DHS mitigates the risks associated with any single sector, making it an attractive option for those seeking steady income without the need for active portfolio management. As of September 2024, DHS boasts a distribution yield of 4.50%, providing investors with a reliable income stream. The fund also has demonstrated a 5-year dividend growth rate, or DGR, of 6.88%, indicating a consistent increase in dividend payouts over time. Additionally, DHS has achieved a 5-year total return compound annual growth rate, or CAGR, of 9.35%, reflecting both dividend income and capital appreciation. Here's how investing in DHS can work towards achieving your financial goals. Year 1. By investing $90 weekly, your total contributions amount to $4,680. With the fund's distribution yield, you can expect an annual dividend income of approximately $210, translating to about $17.50 per month. Year 10. Assuming the fund's historical growth rates, your portfolio could grow to around $81,700. This growth would generate an annual dividend income of approximately $3,677, or about $306 per month. Year 20. Continuing this strategy, your portfolio might reach approximately $313,200, providing an annual dividend income of around $14,094, equating to about $1,175 per month. Year 30. Over 3 decades, your portfolio could potentially grow to an impressive $1,200,000, yielding an annual dividend income of approximately $54,000 or $5,500 per month, surpassing the $3,000 monthly income goal. Number 4 dividend on our list is Realty Income Corporation, often referred to as the monthly dividend company. As a real estate investment trust, or REIT, Realty Income owns and leases 15,450 commercial properties to high-quality tenants across various industries. This extensive and diversified portfolio provides a steady and reliable income stream for investors, making it a top choice for those seeking consistent monthly dividends. As of December 2024, Realty Income announced its 128th dividend increase, raising the monthly dividend to 26.40 per share, resulting in an annualized dividend of $3.168 per share. With a current share price of $57.03, this translates to a dividend yield of approximately 5.56%. The company has a commendable track record of dividend growth, with a 5-year annualized dividend growth rate of 3.05%. Here's how an investment strategy of $90 per week, with all dividends invested, would work. Year 1. Your total contributions would amount to $4,680. With the power of compounding, your portfolio would grow to approximately $4,800. Year 10. The portfolio's value would increase to around $72,500, generating an estimated annual dividend income of $4,033, or about $336 per month. Year 20. The portfolio would grow to approximately $258,500, producing an annual dividend income of $14,373, equating to roughly $1,198 per month. Year 28. At this milestone, the portfolio would reach around $666,647, yielding an annual dividend income of $39,830, or approximately $3,319 per month, achieving our goal of covering monthly rent expenses. Number 3 on our list is Sabine Royalty Trust, trading under the ticker symbol SBR. Unlike traditional companies, SBR doesn't engage directly in operations. Instead, it collects royalties from oil, gas, and mineral production on its properties. This unique setup allows investors to benefit from energy revenues without the risks associated with exploration and production activities. As of February 2025, SBR offers a dividend yield of approximately 7.70%, translating to an annual payout of $5.27 per share. Notably, SBR has demonstrated a robust dividend growth rate with a 3-year growth rate, or DGR3, of 30% and a 5-year growth rate of DGR5 of 25.43%. This indicates a strong potential for increasing income over time. To achieve a monthly passive income of $3,000 from SBR dividends, you'd need an annual income of $36,000. Dividing this by the annual dividend per share, $5.27, suggests you'd require approximately 6,830 shares. With the current share price around $65.41, this equates to an investment of about $447,000. Here's how your investment could grow if you consistently invest $90 per week and reinvest all dividends. By the end of the first year, your contributions total $4,680, marking the start of the compounding effect. After 10 years, the portfolio expands to $72,500, generating approximately $3,661 in annual dividend income as reinvestment gains momentum. By the 20-year mark, the portfolio climbs to $297,900, providing steady monthly returns. Fast forward to year 23, and it reaches $453,500, translating to around $3,253 in monthly dividends. Number 2 on the list is Main Street Capital Corporation, trading under the ticker symbol MAIN, M-A-I-N. This company specializes in providing long-term debt and equity capital to lower middle market companies, essentially helping small and mid-sized businesses grow. Main earns income through interest payments and equity ownership in these businesses, allowing it to pay investors regular monthly dividends. Its diverse investment portfolio across various industries makes it a stable and reliable choice for those seeking both steady income and long-term growth. As of February 2025, Main has a dividend yield of approximately 6.37%, with an annual dividend payout of $3.87 per share. The company has demonstrated a 5% dividend compound annual growth rate, or CAGR, over the last 3 years, indicating a consistent increase in dividend payouts. Additionally, Main stock has experienced an average share price growth of 5.3%, offering both regular income and potential for portfolio appreciation. Here's how it works. If you invest $90 a week and reinvest all your dividends, you'll see your investment grow significantly over time, thanks to the power of compounding. By the end of the first year, your portfolio matches your contributions at $4,680. Fast forward to year 10, and the portfolio will grow to $81,700, generating approximately $363 per month in dividends. By year 20, it will reach $313,200, bringing in about $1,657 per month. At the year 30 mark, your portfolio climbs to an impressive $944,200, hitting the goal of paying $3,000 per month in dividends. Over 30 years, the total value added to your portfolio is $773,732, with $389,990 coming from share price appreciation and $383,039 from reinvesting dividends. Finally, the last dividend on our list is First Trust Buy Right Income ETF, or FTHI. This exchange-traded fund invests in a variety of high-quality stocks while employing a covered call strategy, which involves writing or selling call options on the S&P 500 index. This approach generates additional income by collecting premiums from the sold options, helping to maximize returns. FTHI is a standout choice for investors seeking regular monthly payouts and the potential for capital appreciation over time. As of February 2025, FTHI offers a dividend yield of approximately 8.79%, with an annual payout of $2.03 per share. Notably, FTHI has demonstrated a strong 5-year dividend growth rate of 16.18%, indicating that dividend payments have been increasing over time. The fund's share price has experienced modest growth, with an average increase of 1.21% over the past 5 years. Here's how your investment could grow if you contribute $90 a week and reinvest all your dividends. By the end of year 1, your portfolio will be at $4,680. By year 10, the portfolio grows to $95,500, or about $1,115 per month. The real magic, though, happens in year 14, when your portfolio value reaches $240,600 and your annual dividend income jumps to $44,801, equivalent to $3,735 per month, enough to cover rent. This stock achieves the goal in half the time it took our number 5 pick to reach the same goal. Now, should you go all in and invest all your money in FTHI? Well, I will say no. It's obvious FTHI is the fastest route to reach $3,000 monthly income. It may limit potential gains during strong bull markets and could underperform during periods of high market volatility. Is there even a solution? Yes, diversification. By combining all 6 stocks we've discussed, you can build a portfolio that balances high yields, steady growth, and long-term stability. This mix gives you a starting dividend yield of 8.4%, a 10-year dividend growth rate of 5.7%, and an average share price growth of 2.9%, ensuring both reliable income and capital appreciation. Here's how the portfolio grows with a consistent $90 weekly investment. By the end of year 1, your portfolio will be worth $4,680. Fast forward 10 years, and that balance jumps to $82,300, generating $750 per month in dividends. By year 20, compounding takes full effect, growing your portfolio to $345,800, delivering $2,650 per month in passive income. 1 year later, in year 21, the portfolio surpassed the $3,000 per month milestone, bringing in $37,120 annually with a total balance of $400,500. Now, looking at individual timelines. Main Street Capital Corp takes the longest, reaching $3,256 per month in year 30, proving the power of compounding. Realty Income Corporation follows, hitting $3,319 per month in year 28 with its steady real estate payouts. Wisdom Tree U.S. High Dividend Fund, or DHS, reaches $3,248 per month in year 25, leveraging a diversified dividend stock approach. Sabine Royalty Trust gets there in year 23, benefiting from energy-based royalties. AGNC Investment Corp reaches $3,275 per month in year 22, standing out with its high-yield strategy. The fastest? First Trust Buy Right Income ETF, FDHI, reaching $3,735 per month in year 14. While FTHI delivers the quickest results, it almost comes with the highest risk. That's why a well-balanced portfolio wins in the long run, hitting the $3,000 per month goal in just 21 years, faster than all but FTHI. Yet, much safer by spreading your investments across all 6 dividend payers. You build a portfolio that grows steadily, provides consistent income, and finally achieving the goal of $3,000 monthly income. Which stock stood out to you? Let's know your thoughts in the comment section. If you found this valuable, don't forget to like, subscribe, and share for more tips on building wealth.